This episode is brought to you by Raymond James. For over 25 years, Raymond James has been helping Canadians achieve their financial goals. They are Canada's largest independent financial services firm with over 520 dedicated advisors. They've got $88 billion in assets under management and capital market services. With no proprietary product to push, their advisors are free to focus on the unique needs of their clients. Now, whether you're saving for your children's education, preparing for retirement, or safeguarding wealth for future generations, Raymond James is committed to guiding you every step of the way. Visit raymondjames.ca today to discover how you can live a life well planned. Hey everyone, welcome to a brand new episode of In the Money with Amber Kanwar. We are continuing our CEO Summer Series, and today on the show, we've got Ross Beaty. He is the chairman and the founder of Equinox Gold, and he has founded and worked in the gold space for more than 30 years. So we've got a wealth of experience to tap into. We talk about the gold price. We talk about gold stocks. We talk about why his gold stock has been lagging, and he's pretty candid about the reasons, but also optimistic about the future. Let's get into it. The information provided in this podcast is for informational purposes only and does not constitute financial, investment, or professional advice. The views expressed by the host and the guests are their own and do not necessarily reflect the opinions of any organization or company. The host and guests may maintain positions in any securities discussed on the podcast. Always consult a qualified financial advisor or professional before making any investment decisions. Thank you to our partners at ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Ross Beaty, thank you so much for joining me on the show.
You're welcome.
You are a builder of businesses, mostly in mining, mostly in gold, though I know you've had a couple of detours along your career, and we'll talk about that. But it's great to get your perspective at a time where it looks like real vindication for gold bulls. After several years of calling for gold's outperformance, boy, have we seen it in a major way in the last couple of years. Is this something you anticipated?
I certainly anticipated a rise in gold when we started the sort of my last big company called Equinox Gold. We started that at the end of 2017, but I had started to move into gold on as an investor and with a couple other junior companies that I was managing. Mid 2010s, I would say 2015, 16, gold hit an unreasonable low at that point. I think it was $1,050 an ounce, and it was not a genius call to say gold was likely to go up north of $2,000. And I've been calling for that. And generally speaking, it's done pretty well. Gold's been in a bull market since 2016 when it really broke out. And having said all of that, I certainly did not expect gold to have this sort of parabolic rise that it's seen since President Trump was elected, and even more particularly since the Russian-Ukraine war. That kind of really started things going, where the dollar became a currency that was used for geopolitical purposes more than anything, and Trump is still doing that today. So that's really fueled a lot of the rise in gold, but it's been on wheels. Having said that, I see nothing that's going to really slow it down. I think gold still has great legs, great opportunities for continuing bullish movement. And so I'm very optimistic we're going to continue to see a good run in gold.
Tell me what underpins that, because I feel like people have different reasons why they like gold. Some view it as insulation in the portfolio, hedge against inflation, just a trade against the US dollar, which is languishing around 4-year lows, which is allowed, creates good conditions. It's not the only condition, but it creates good conditions for gold to outperform. As I said, you've been building businesses in this space since the 1980s. So what is your guiding light when it comes to gold?
Yeah, I mean, Amber, really, as a developer, as a person who's been an entrepreneur in the resource business, be it renewable energy or mining or exploration, those are all the areas that I've worked in for really for better part of 40 years now, running public companies. What I've tried to do is look not where things are today, but where they're going, and really analyze global trends. But it's not just the demand side, which most economists tend to focus on, most investors tend to focus on. It's also the supply side of metals like gold or silver or copper or nickel or the battery metals and so on. And if you look at both of those supply demand sides, you take a view on where things are going to go. And of course, once that happens, I've built companies that take advantage of that. I built my first company was a gold company in the 80s. Then I started in 1994. I sold the gold company, started my silver company called Pan American Silver. When silver was close to the bottom, it was trading for $4 an ounce or $5 an ounce then. And we built a big company, and it took a long time to get real traction, but the company took off, and it's one of the world's biggest silver producers today and world's biggest mining companies. And then renewable energy was out of favor. Now it's in favor. And the gold game started in 2016 for me. We began Equinox Gold at the end of 2017. That's been a good run too. You ask, why is gold moving specifically? And I would answer sort of everything you said, yes. But also, quite frankly, gold has behaved counter traditional. Typically gold does okay when inflation's running. We haven't had a lot of inflation in the last few years. Gold's still done well. Typically, gold is inversely correlated to the strength of the U.S. dollar. We haven't seen that of late. Gold, the U.S. dollar was strong until just this year. It was very strong. Gold still did well. So gold's moved contrary to many, many pundits who use the last 50 years as predictions for where gold is going. Why those aren't working today is because the fundamental factor driving gold, I think, is the desire of many countries to get off treasury assets held in U.S. dollars. That is to say, direct dollar investments. So they've shifted from owning the greenback, owning U.S. dollars in their holdings, to gold or other currencies. It's been a giant part of the gold demand side, particularly China, but many countries in the world that want to move off the dollar into other reserve currencies. And gold is fundamentally money. It's fundamentally an alternative currency, an alternative investment asset that countries can own as just an alternative way to park their surplus resources. And that's driven gold more than any other factor in the last few years. You've seen annual record amounts of central bank buying, but on the supply side, gold is not being produced in huge quantities. The amount of gold production today is not that different than it was 11 or 12 years ago. It's up a little bit, but not in any way to match the growth in the demand side. So that's a very important bullish factor as well, that gold supply simply cannot change to meet this new demand. If you could turn on gold mines all over the world, you wouldn't have the gold price where it is today. But you simply can't. Gold mines, like copper mines and uranium mines and any kind of mine, they take years and years to build, years to discover, to develop, to open up, to get all the permits and licenses. You're looking at 15 to 20 years typically between discovery and operation. So it's very inelastic, the supply side for gold. And that's really playing into the market today as much as the increase in demand.
And so if central bank buying is such a big factor, to your point, maybe the biggest factor right now, the question is, do you see that continuing? And do you dare to give me your next price target for gold?
No, I definitely don't dare to give you my next price target. I just would say that the factors that have caused gold to rise from its lows, 8 years ago, 7 years ago, are still there today. I see no great reason things will change. I don't think all of a sudden countries will say, "Oh, we like U.S. dollars again. We want to hold more." If anything, what's happened this year has reversed that, or has accelerated the trend for countries not to want to own the dollar. They want to own other things, and they're creating all sorts of alternative trading vehicles that will allow them to trade big things like oil and other metals or other products that they import, that they don't rely on the dollar. They're renminbi now, of course, in China. They're using renminbi, rupee exchange rates now that are going. The ruble in Russia is being used now between China and Russia. All the trade they have. There's a tremendous amount of security, I think, if you're dealing with a country like China, if it has a lot of its resources in gold, because it can then back up its own currency with something other than the dollar. I think a lot of central bankers also are nervous about the US dollar weakening. We've certainly seen that happen this year. And I think all of these factors, global trust in what's going on in the US, this whole tariff war is creating all manner of chaos. There's going to be winners and losers, but one of the winners is gold. It's gold because people don't like uncertainty. They don't like chaos. They don't want to put a lot of their holdings into a jurisdiction that has such rather radical economic behavior. So gold is a winner in that sense. How long that lasts, I don't know, but I do think it's going to last for a substantial period of time.
Boy, has there been a lot of noise around healthcare lately. But if you dig a little deeper, you'll find the sector is trading at near a historic discount to the S&P 500, even as many of these companies continue to raise their dividend. So why does that matter? Healthcare can be defensive in your portfolio, especially as it's underpinned by rising cash flows and growth through massive R&D pipelines. Middlefield is working on capturing that opportunity. They've got expert stock pickers and work with an exclusive medical advisor to drive solid total returns over the last decade. For investors looking for income, capital appreciation, and downside protection, visit middlefield.com to learn more. Well, I wonder if you could lean on your history in the space to help understand the other side of that. When gold underperforms, are there themes out there that tend to trigger that underperformance? How do you think about when gold is no longer in favor? And are there common themes every time there's a down cycle for gold? What's usually driving that?
Yeah, there really aren't. I mean, I've lived through, many years of running public markets, and this is a very cyclical world. It doesn't matter whether you're looking at oil or gold or copper or lithium. Things are very cyclical, and very often a cycle will be the same fundamentals as a previous cycle, and very often it won't be. And this particular cycle, where you have this remarkable upswing in things like gold, and to a lesser degree things like silver and the other metals, I really haven't seen it in my own career. I've seen the opposite. I've seen a time when in the late 80s and 90s, particularly in the 90s, when central banks were bailing out of gold because they didn't think it was a useful thing to have in their treasury asset base. So, for example, the United Kingdom, Gordon Brown sold all of Great Britain's gold resources. Canadian government sold all of its gold resources. They just thought it was, in the words of, I think, John Maynard Keynes, a useless relic. Well, it's not a useless relic, and other governments beg to differ. China begs to differ. India begs to differ. Russia, Poland. I could just reel off all the countries that are increasing their gold exposure right now rather than decreasing it. But if that were to change, you're going to see a calamitous decline in the gold price. It's a big market, but it's not gigantic. And if a central bank decides to sell, hang on to your hat. The price is going down. If they have any significant holdings. Now, when that happens, who knows? Do I think it's going to happen? Absolutely not. But boy, markets tend to change quickly, and when they do, you don't want to put all your eggs in that basket for sure.
I'll caveat this by saying that gold has outperformed Bitcoin, but they call Bitcoin digital gold, and I foresee a day. I don't think it's outside the realm of possibility. Maybe a central bank adds crypto to their asset purchases. Do you think that's insane? And if they do, is that a risk for gold?
Crypto for sure has been an alternative investment for many individual investors and increasingly institutional investors for sure. I'm not so sure that changes the volume of demand or the value of demand for something like gold. It may take money away from stocks and bonds and other forms of investment, but it certainly probably decreases the amount of new money going to something like gold from retail and institutional investors. That is quite separate, as I think you observed here in your question, from crypto being held by central banks. And so far, I don't think there are any central banks that own significant amounts of crypto, or even that are considering it. In fact, on the contrary, most central bankers decry the value of crypto as any kind of a traditional reserve base. So I sort of don't see that coming very soon. And crypto doesn't really behave very well either. It's extremely volatile. It's rather small in its volume compared to, say, the pool of gold available. It has many, many good things about it. Obviously, it's cheap to transfer, and it's easy, and it's fungible. But so far, I don't see that happening. No, I think it's more if there were, for example, a shift in, I don't know, maybe. I just, I'm trying to think of things that would change the dialogue right now on the U.S. dollar and on the tendency of central banks to move away from the dollar. I just don't see that changing. I think there's so many, right now at least. I mean, there's so much chaos happening on global financial markets because of all this tariff noise. And it's just scaring central banks, and they're moving into stuff like gold. And it's so powerfully bullish for the gold commodity. I don't see any other significant commodity that could take the place of that right now.
Well, and maybe a measure of that is how the gold stocks are behaving. You know this, that sometimes gold can move higher and the gold stocks don't move. And for a while, the gold stocks were not keeping pace with the rally in bullion. But if you look over the last year or two, gold stocks are outperforming bullion. And again, that doesn't always happen. What does that tell you when the stocks start to act better than the underlying commodity?
Yeah, well, you've absolutely hit it on the head. It was a source of great puzzlement for me over the last 2 or 3 years, where the gold price was rising so strongly, but gold equities really weren't. Gold equities in 2024 had a nice run in the middle of the year. The GDX were up around 50%, but they gave it all back at the end of the year, and they ended the year more or less flat, even though gold had made this great move. So I've been very puzzled why the traditional correlation between gold prices hasn't gone the traditional correlation between gold prices and gold equities actually did not exist for the last 3 years, where it has for the last 50 years. So something was going on that was different, and I think it was really attributed to different investment pools buying metal versus equities. And the equity pool of investors, being the institutional investors, the retail investors, they were making lots of money in other things like stocks and bonds and crypto and other stuff, and they just didn't need to go into gold. Maybe they didn't understand gold. They were younger investors. They never invested in gold. The older investors tend to be the ones who understand the importance of gold in anybody's investment portfolio. And all of a sudden this year, things are different. So this year, the equities have outperformed gold. And I do think that's going to continue, because that's the typical trend. And it makes a lot of sense. If, of course, the value of your product you're selling goes up a lot and your costs stay the same, you're making a lot more money. So the gold equities are the producers particularly, they're making historic levels of cash flow. And ultimately that flows into price earnings ratios and all the metrics that make a stock go up or a stock go down. And that's, I think, propelling gold equities higher this year. And I do think that'll continue. It was a very weird, anomalous situation that we had the last couple of years, where we had these great gold prices and really flat gold equities, almost no interest in particularly the smaller companies, the juniors.
And I wonder what you're hearing from fund managers about their interest. Are you hearing more from generalists than you were in the past? Certainly, in the years that I've been covering the Canadian markets, I feel like the hangover of how gold companies behaved in 2010, 2011, 2012, they made bad deals at the top. They didn't generate that shareholder return, and many investors just put that sector in a box and never looked at it again. For sure. That was the prevailing rhetoric anyway. That these gold companies did dumb deals at the top of the market, and they had to have write-offs, and there's all sorts of capital value. The reality, of course, is quite different. Companies are pushed when gold prices are high, and companies are making lots of money. They've got lots of cash in their books. They're pushed by investors to make deals and get bigger.
And so a lot of companies did that. As soon as they completed that process, the gold price cratered, and all of a sudden they went from being darlings to bums. And whereas in fact investors should just look at themselves and say, well, you push somebody to make a deal, gold price goes down, the value of that deal drops in half or it goes down even more. You cannot criticize the company for making those deals. You should look at yourself in the mirror. Now, the feedback, of course, investors never blame themselves. They always blame the company if things go down, and they always think they're clever investors if things go up. So when we had that purging of shareholder value, a reset happened, and I think you're correct that all of a sudden now companies are starting to make lots more money. They tend not to make those same bull market deals today. They will. Don't worry, they will. You're seeing a fair bit of M&A activity right now in the space, so that's going to continue. And it's logical. Companies are making a pile of money right now. There is a general truism that scale matters, that the bigger you get, the better multiple you have. It's a wealth creating exercise by itself to make a gold company bigger. You have more diversification, you have a larger pool of investors to invest in your company, and typically you have better earnings. And so it's a logical thing. It's not invariable. You've had Newmont and Barrick actually underperform the overall market, but they're still trading at higher premiums than many other companies. But on the whole, the gold equities today are doing much better than they have done. And it really started earlier this year, I think, when you had a series of quarters where you actually saw the value of the higher gold price hitting the balance sheets and income statements of these companies. And finally, investors are saying, and yeah, it's across the board. It's not just gold specific funds. It's generalists. It's retail investors. Just look at the liquidity of for example, my main deal right now, which is Equinox Gold. The liquidity in that company in the last 3 months has tripled. Where we were trading an average of 4 or 5 million shares a day, we're now trading 15 to 20 million shares a day. It's just remarkable. So there's and of course, that's not all long-term investment money. A lot of that's short-term, high-frequency, quantitative, quant funds and so on. But it's really remarkable to see that volume increase. I think that's kind of across the board.
For a decade, the Murray Wealth Group has been dedicated to disciplined, long-term investing. The result? Their global equity growth fund boasts an impressive 14% compound return since inception, and they're proud to celebrate their 10-year anniversary of building wealth for investors across Canada. Discover how the Murray Wealth Group can work for you by visiting murraywealthgroup.com. World-class investing, wealth built together. We'll talk in depth about Equinox in a moment, but I also know that you guys have been participating in M&A. You recently closed a deal, Calibre Mining, and you touched on kind of M&A. And I feel like, the poster child was like in 2011 when Barrick bought Equinox Minerals, which of course you're very familiar with. And that got the reputation as like, overpaying for assets, diversification. What are we getting? So talk about that style of M&A versus the M&A that we're getting today, because it's a lot of, and even you can apply it to Calibre, like a lot of no premium type of deals, right? And I feel like that is a legacy of the lessons that were learned 15 years ago.
Well, there have been a couple of no premium deals, but by and large, deals are still done at premiums. They're in the ordinary course. Not many companies want to sell their company that without a premium. That's something that Mark Bristow's championed, but he's not done a single deal in 7 years. So, I mean, he talks a lot, but he doesn't do anything. And one of the reasons Barrick's underperformed is exactly that. Not to mention calamities like that in Mali. But and I'm not disparaging Mark. He's a great guy, a friend, and a tremendous value investor. But he said I don't think he saw the gold price move coming, and by not doing anything, I think he's made a mistake. On the other hand, you have Newmont. Newmont's done a couple of big deals, especially the deal to buy Newcrest, and it hasn't really been that well received by investors. So you're kind of damned if you do, and you're damned if you don't. In the meantime, you've seen a bunch of Chinese companies sopping up junior after junior, even mid-tier after mid-tier, all over the world, creating huge companies like Zijin Mining, one of the biggest gold companies now in the world, out of nowhere. And I think there's a lot of smart money that is behind those guys, and they're doing really, really well. CMOC, a company that just bought one of my juniors called Lumina Gold a month or so ago. CMOC is, was a tiny little Chinese molybdenum company 10 years ago. Today, it's one of the top 10 copper producers, the world's largest cobalt producer, one of the largest moly producers and tungsten producers. Is a giant company, and now they're moving into gold, and they got an unbelievable bargain buying this gold company from me because nobody else wanted it. We shopped it to 40 or 50 companies. Nobody wanted it. It's a great deposit. It's in a tricky country. It's in Ecuador. But I think they're going to make out like bandits, and good for them. So the Chinese companies have been aggressive as hell in a market where Western companies have been criticized by shareholders for not doing for doing too many dumb deals, 10, 12 years ago. The world doesn't stay still. And it's like I say, investors are super clever. If they all think they're great if things go up, and they criticize the companies if things go down. It's one of those things you have to live with. You have to build something for the long term, and you have to try to get out of the noise of quarterly statements and the short term thinking that it's so much a factor today in world investment markets.
We can talk about the investors and what they're pushing for, but let's talk about that in the context of Equinox Gold. And you've been very candid about this. You can see that the stock has underperformed bullion, and it has underperformed its peers. And you've been candid about some of the operational issues that have kind of resulted in this. Can you give us broad strokes in your analysis on what were you hoping to do with Equinox? Where did it get derailed? And then how do you see the path back?
Yeah, good question. Embarrassing question, but good question. So, we started Equinox at the beginning of 2018. It was meant to be, like my swan song company, and focus on gold, take advantage of the bull run that I thought was going to happen in the gold price, and, build something with a really big company. That was the objective. So we started with a couple of exploration plays. We built a mine. We bought a mine. Then we did a merger with a company called Leo Gold, which was a disaster. That was a big mistake. Even though that was during COVID, the stock had a wonderful run. It went from $5 to $15, and then we had a problem in Mexico with one of the mines that we acquired through that deal called Los Filos, and we just hit a intransigent local community. Let's just say that, and we've had nothing but problems, and it resulted in us actually shutting the mine down this year to say to the community, we are serious. We have to have a new agreement. We can't live with the old agreement. So the mine is shut down right now, and that has not helped us one bit. Especially this year.
And did you not see, you didn't see that coming? Because you've done so many deals. You've done so many deals in the past.
I know. I just missed it. I take a lot of personal credit. I've done really well in Mexico. I've built mines, operated mines, 3 or 4 or 5 different times in my career, and it's been a great place. I love Mexico. Sometimes a company has unions that are by and large typically understanding. They're tough, but you can make a deal with them. And other times you get a union that's led by somebody who's an ideologue or a militant or very hostile to the whole corporate ethos. And the solution is a company goes on strike, and those strikes tend to last a while. That's kind of my analogy for what happened here. We're just dealing with quite unreasonable people, and they've been entitled through bad behavior through other companies that operated that mine. And we just finally had to say, we're not playing that game. We're still shut down, but we are hoping that we have some green shoots that will allow that mine to get going again later this year. That would be a big step and a positive move. But in the meantime, we operate things, and we acquired a company called Premier Gold. We built a really big mine. That took us 3 years to build. It opened up last year, and we've had a rather rocky startup. It hasn't gone as well as we've wanted. We're pretty much over the operational issues we've had. We're running it pretty much at close to design anyway, but it's taken a while and it's been a little bit longer, and the grade hasn't been what we thought it was going to be. So it's going to change from being a really big, one of Canada's biggest mines to nearly one of Canada's biggest mines, but it's not quite as big as we thought. And the market knows that now. We've telegraphed it to everybody. We've guided lower than we expected, and so I think we've we've got a reasonable expectation of production from that mine. That hasn't helped us with this year when we had, of course, those operational issues. So that was another negative. And then when you have a merger, we acquired Calibre Mining. When you have a merger, typically there are investors of both companies that aren't. That's not the company they wanted to invest in. And I've experienced this many, many times in my career. When you do a merger with two companies, putting them together, you tend to have some rollover of the shares of each company, and you've got to sop up that overhang. That took place in May and June. I think it's behind us now. So really, it's been, you're absolutely right. We've had all these kind of headwinds that we've had to overcome within a market that's been a pretty strong market for gold companies. So the merger is complete now. We've taken the hard medicine in Mexico. Our other mines are doing well. Greenstone, we've guided to where we think it's going to produce. We are hoping to perform or outperform market expectations going forward. We'll have to have 2 or 3 or 4 quarters to prove that we are guiding sensibly and we're going to actually do what we say we're going to do. The actual company, if you look at it, from 40,000 feet, looks in pretty good shape. We're making lots of money. We're paying down our debt. We have some asset sales we're looking at doing. We think Los Filos should get going again. Our mines in Brazil are doing well. Our mine in California is doing well. Greenstone's now over the hurdles. It's doing well. Our mine in Newfoundland called Valentine should be open in about a month. It should be producing gold in about a month and a half. And that's going to be a big milestone. So it's setting up for, I think, a really great, our Q3 and Q4 are always better than our first 2 quarters. They've been like that for years just because of weather patterns in Latin America. So anyway, I'm very bullish of how things are going to look. I think we're going to outperform. We've outperformed most gold companies since the end of June, and I'm looking forward to that continuing. What else can I say?
Maybe I'll say things now, and I'm not saying this to beat you up. I'm saying it because, if you want to invest in gold stocks, Lundin Mining has already doubled. Alamos, Agnico Eagle, they've already run up with the price. So it's actually quite rare to find a stock that's trading, last I saw, let's say you're trading at a 40% discount to your net asset value. So I think it is really important for shareholders to understand, like, if you are getting your act together with respect to certain things. And I'll be honest, Ross, I don't hear a lot of CEOs or executives who talk candidly about the mistakes that were made and what went wrong. And maybe that's a first step to addressing like how we can get it right going forward.
Oh yeah, you've got to be honest. I mean, I've looked at other companies and have seen cock-ups they've made. And there's been a whole bunch of them in the last 5 years with Canadian companies. IAM Gold had a terrible, terrible time. New Gold had a terrible, terrible time. Some of the companies that don't even exist today, they don't exist because they blew their brains out. The capital costs and new mine constructions went through the roof. They delayed construction. They had all kinds of problems. And I think you do have to, first of all, be honest about what the negatives are in order to fix them and then deal with the positives. So I do think, honestly, that we are through a lot of these negative issues that have bedeviled us for a while. But, ask me in a year how we do, and I'll hopefully tell you that we are hitting our targets and the stock has doubled or whatever, and certainly getting closer to the valuations that our peers, like Alamos, like Lundin Gold, are trading at. And if that happens, our stock should double. That's the simple as that.
I mean, with gold where it is, you'd have to imagine, demand is high to add ounces, because to your point, we're not opening up new mines. And so if you're looking for like a low valuation name, like I wonder how much M&A has crossed your table. You mentioned you were trying to sell like that little mine and there were no buyers. So is there a dearth of buyers? Can you give me any insight into like why hasn't Equinox even been scooped up or been attempted to be scooped up? Because you're operating in stable jurisdictions, Canada, US.
Yeah, no, for sure. The one of the reasons is, so in my career, I've had many, many companies, maybe 15 or something like that, I think 16 now. 4 of them have been large operating companies like Equinox, Pan American Silver, my renewable energy company, my first company. And then 11 have been the true exploration speculations where you discover something and then you add value and then you sell it to a big company. So And then I've bought lots and lots of companies. So I've sort of been all over the map on this stuff. Equinox Gold was built as a custom created vehicle to give investors superior leverage to the price of gold. In other words, leverage that they get with an equity rather than buying the metal. And yes, we had that wonderful run. We delivered that for the first 3 years. And for the last 4 years, we have underperformed and have not delivered that. But at the end of the day, what have we built? We've built a very large gold producing company, lower cost. Greenstone and Valentine will significantly lower our costs. We're actually going to be a giant cash generator in the next year, 2-3 years. $1 billion plus in operating cash flow. We'll have very, very little debt coming out of the next 2 years. And that's a great recipe for outperformance, I think. Getting to where, IAMGOLD was on the bottom, and then it finally sold a bunch of assets, got their big mine going, and now it's outperformed. We are just on the cusp of that. We call it an inflection point now. But at the end of the day, the company that I've been trying to build here with Equinox is I've wanted to build a big operating gold company. I'm convinced that scale matters. The bigger you get, the better multiples you get, the more diversification you get, the less risk you have, the better balance sheet you have. You can kick out a dividend. We're on the cusp of doing that now. Could be any quarter because, of course, now we're generating some massive cash flows. So we've got all these optionality opportunities, selling some assets, getting Los Filos going again. We've got exploration value coming all over the portfolio. It's a good story, and it's getting to be the one that I was sort of that I had envisaged when we began the company in 2018. Now, is there a company that might want to buy it? There's not a lot of companies that can buy a $5 or $6 billion company. There are some, and there's always companies you can put together to make 1 and 1 3 potentially, but we've done a lot of that. And we're certainly not looking at doing anything more in terms of us being the acquirer. We want to digest the Calibre deal. That's going to take a very long time. And quite frankly, it may be the last deal we do, because we're essentially built. We're a 1 million ounce gold producer, just on the cusp of producing 1 million ounces a year. That's top 15 in the world. We might get to 1.5 if we develop all our other assets. I'd say that's probably kind of plan A to get there. And then plan B, who knows what we're going to do after this. We are not in that growth environment. I would say we're not as appealing to many companies as a longer term core, kind of boring company. There's a few of them out there that have an asset that might be orphaned, or it has a strategy of maybe it would be able to be an acquisition target. We've tried to build a big world-leading gold company, and that's the path we're on.
It's clear you have a playbook, and that playbook probably draws on your decades of experience, but it's also a small group, especially in Canada, right? Everybody kind of knows everybody, especially the builders in this space. And I'm curious, who do you admire in terms of value creators in this country, in your industry?
Well, there's a whole bunch of them. There's the sort of exploration value adders like Richard Warwick. The guy's just done an unbelievable job with company after company, and he's very unseen, unheard, but he creates value. He just did a deal announced this morning to sell his Augusta Gold to Amber Gold. I mean, he's amazing. Lucas Lundin, one of my best friends. He died a couple of years ago, but the guy just was extraordinary. He created so much wealth. And one of the things he did is he also fostered 4 young boys who are growing up and following their father's footsteps, just like Lucas did to his father. He was a Vancouver-based guy. He was European roots, Swedish and Swiss, but his boys are in Vancouver now. They're building great companies, Lundin Gold, Lundin Mining, one after the other. It's just so exciting to see that. And so there's a whole pile of them in Canada. And a lot of them I admire. Those are just 2 names that quickly come to mind. We've got this is something Canada does really well. It has Canadian entrepreneurs in the mining business who are working globally. They're well backed with global finance, and right now they're in Vancouver alone. There's more than 20 companies with more than $1 billion market capitalizations in the mining business. That's more than any city in the world. So this is something we're good at in Canada, and I just hope our government maintains its support for the infrastructure of the Canadian mining industry. The stock exchanges, the accounting firms, the legal firms, the regulations that allow us to work effectively, and really make this a Canadian champion industry.
You know what? It's so funny because normally we speak to CEOs, executives, money managers. And Canada, even if they're Canadian, can be a bit of a punching bag. We're not good at this. We're not good at this. Should improve this. So it's really interesting to hear you talk about Canada's existing, not aspirational, but existing position in this industry, especially because you've seen jurisdictions all over the world.
Yep, for sure. No, this is one game where we have a center of excellence. And, the other thing is, I have rants, hundreds of rants.
That's what a podcast is for.
I do very routinely when I'm in the shower. But, one of the things that's really curious to me is this whole obsession about critical minerals. And, the government's doing all these ridiculous things to both foster waste money mainly and talk about it. And they're doing things like they're trying to stop Chinese, investment in Canadian companies, particularly like exploration and development companies that are, 15 years from being producers of metal, or maybe never will produce metal if things happen in places that they work, like Latin America. And it's just all this fuzzy-headed, wrong-headed policy that sometimes happens and is happening right now. I'm just hoping it doesn't continue.
Why do you think it's wrong-headed? A lot of people will say, like, we're not. If it is critical, do we want it in the hands of a country that may not have our best interests at heart?
Yeah, well, most of these are not critical. That's the main thing. If you look at rare earth metals, for example, there's plenty of rare earth metals in Canada, in the U.S., in the rest of the world. The trouble is we don't produce the metals here. Canadian companies tend to be good at discovering resources in the ground. Chinese companies have become very good at producing the metal, taking resources from all over the world. In that particular case, rare earths, there is a big rare earth deposit in China, but there's rare earths all over the world. They're neither rare nor earths, by the way. Or cobalt or lithium or any metal that's the so-called critical metal list. Copper, there's copper all over the place. There's tons of copper. Every single big company has a portfolio of copper development properties. The problem is the smelting and the refining has gone to China in magnesium, in titanium, in most metals. And why is that? Because China can produce those metals much more cheaply than a smelter or refinery in Canada or the US or Europe. That's just the way things work. That's called globalization. So if you're going to reverse that, so it's not the discovery of metals, it's not the holding of the resources in the ground, it's the production of the metals for useful things like bombs and wind turbines and guided missiles and bombers, to name a few things that use rare earth metals, for example. So it's wrong-headed of the Canadian government or the U.S. government to be funding exploration for these things when there's a 5 to 10 to 20-year timeline before they're actually going to produce. It would be way wiser for the government to fund production of the metals, so to support refineries or smelters in Canada that produce these things. And of course, all this is happening in this absolutely bizarre chaos world of President Trump's tariff battles. He's clamping this 50% duty on imported, or 35%, whatever it is, on imported copper right now into the U.S. Well, Canada produces a fair bit of import of copper that goes into the U.S. from a smelter in Quebec, and another one, I think, is another one in New Brunswick. But Canada really has very little smelting capacity. But that which it has goes into the U.S. And how on earth is the U.S. going to, in any kind of quick timeline, going to increase its copper production from shutting down, or seriously hurting Canadian smelter production of something as basic as copper? It's crazy. It's crazy. It is dysfunctional. It will cause turmoil, unnecessary cost. It will be inflationary. It will stymie growth. We're going to get into a stagflation world, I think. It'll be great for gold, but man, it is going to be continuing turmoil. And so many of these policies that I see the government implementing are just wrong-headed. They understand the demand side maybe, but they don't have a clue about the supply, where these metals come from, how much there is in the world, how long they take to produce, who is producing them. And and when you understand that, you understand the nonsense of an awful lot of these policies.
Well, and I know a lot of eyebrows were raised about, like, are you does the tariff mean, like, you can't tariff something, you can't grow copper in the ground. It's either there where you are or it isn't. There's really little that you can do to affect that in the way of tariffs. But since we're talking about Trump policy, one of the other initiatives has been to really pull back on the incentives for the renewable sector. And another part of your life is that you were at Altera, so focused on those renewable on renewable energy. And I'm curious how you think about what that policy does for the future viability of renewables.
Oh man, I mean, Trump is the king of chaos, and he's just, he's just done so many regressive things, and I'm just shocked at the backwards direction of certain of his policies. He's got lots of other good policies. I'm not slagging Trump completely. I know, people always complain I slag him, but this is one area where, for the sake of the planet, for heaven's sakes, understand science and understand CO2 trends and global warming and human cause of all that stuff. It's black and white. It's not gray anymore. It's black and white. Anybody who doesn't like renewable energy doesn't believe in science. And so it's just bizarre to me to see the rollback of renewable energy credits. We absolutely have to, as a globe, get away from fossil fuel burning and CO2 increases in the atmosphere. We absolutely have to. It's an existential thing. You're seeing all sorts of weather-dominated chaos. It's going to morph into climate refugees and climate immigration chaos. So, Europe is on the page. Canada was trying to be on the page. China's actually on the page now as being a very, very committed country to increasing its renewable energy production. And we've had a great move under Biden, and all of a sudden it's rolled back just because I think it was a Biden initiative that the mega guys don't like anything about. Plus, of course, there's a very large hydrocarbon business in the U.S. that tends to be on the Republican side. So it's woolly-headed. It's not going to persist. It won't last through Trump's term, I don't think, or past Trump's term. But it is where it is now. You can tell I'm not a big fan of it. But I think I'm not a big fan of it because as a citizen of the world, I think it's a very negative thing. I really see the cost of warming Earth, and it's a cost on humans. It's a cost on all species. And I'm kind of not that keen on having my kids living in a world of greater chaos than we need when we know the science behind what's happening.
Would you, as an entrepreneur, when you think about opportunities, everything is in cycles. Renewables was hot, renewables was not. Is this an area where you think it's like so out of favor that if you were opportunistic or entrepreneurial, this is actually a good time to start? Well,
if I wasn't the age I am, maybe I would think that, but I'm done with the business once I finish my Equinox Gold game. I'm pretty well done, I think. So, but would I do it if I was younger? I'm not so sure. It's one thing I learned when I was building my renewable energy company, and we had operations in France and in all over Canada, hydro, wind, solar, geothermal, Iceland, all over the U.S., Chile, Peru.
I went to the Iceland one because didn't Altera own Blue Lagoon?
Sure, we did. And
yeah. That's right.
You were swimming in our wastewater. Not a very palatable thing to think of, but it was the stuff we took electricity from the boiling water.
That's good marketing because I felt like it was a wellness experience.
Dumped it into the Blue Lagoon, and this brilliant Icelandic entrepreneur made it into one of the world's biggest spas. So pretty cool. It's a great place, by the way. It's an absolutely great place. We're out of that completely, but anyway, it's a tough game. I've really loved the mining business. It's a fun business if you're successful, and the people in it are great. The renewable energy game is mainly a finance game. It's mainly about the cost of capital because you have these long-term producing assets that might have predictable cost structures, predictable long-term power purchase agreements for maybe 30 years or 40 years. So it's rather boring. Once you get your project built and your debt sorted out for that project, you go into another one. Well, if you borrow money at 9%, you borrow say let's just say $5 billion, which is not a huge amount in that business. versus borrowing at 4%, that same $5 billion, that's a 5% spread on, $5 billion, $250 million bucks a year, which is real money if you multiply that times 30 years. So cost of capital is so important in that game. And we were always smaller than we should have been. So I, again, was trying to build scale in that company, bigger and bigger and bigger. And finally, the company, just today, they announced, I think, that they're going to be bought out by the Caisse de Dépôt later on this month. And that's, so that's going to be adios, the public company. But of course, all the assets we had will go into the case and bury themselves into that very low cost of capital business, which is probably where they should be rather than in the public company sector.
Ross, we only have a couple minutes left, and I just want to do a couple rapid fire questions just because you've got such a wealth of experience. The best deal you've ever done?
Oh, it was the copper companies that I sold. I began Lumina Copper in 2002. The company split into 6 different companies, sold all of them by 2014, 75 times initial cost, I think. It was pretty good. We spent $200 million, sold it for $2 billion.
That is good. That's good. And a short answer on how you got from 200 to $2 billion. The worst deal you've ever done?
The worst deal was, without a doubt, I wasted 3 years of my life working in Eastern Russia on a big silver deposit with Pan American Silver, late 90s. Frustrating, hard work, chaos, crazy country, kleptocrats at every corner, and dysfunctional as hell. I finally got raided by a St. Petersburg company allied with Putin and blown out of the water. Wasted 3 years of my life, huge deposit. They just stole it from us. We got our money back, but it was a waste of time and a lot of brain damage too, just trying to build this company in a horrible country like Russia.
That sounds awful. It sounds like a whole other podcast. I wish I had more than 2 minutes left. With everything that gold moving up and you're optimistic there, is there a metal out there now or an area of the market right now that you think the opportunity is ripe, but it hasn't happened yet?
Yeah, I can't answer that. I don't know. I'm not a real investor, so I really am not looking around. The big metals, of course, in favor of gold, silver, and copper. I'd buy those any day of the year. But copper's not likely to double, but it's got really good legs. Gold, anything can happen to gold. It's more of a wild animal. And silver's got really good legs too. So those are metals that I really like. But beyond that, I'm not investing in anything else. I'm not looking for anything else. I'm actually in my last company, so I'm exiting the game that I've been in for 50 years. Regrettably, that's the future will be for the young.
Well, if Equinox does turn around, it won't be so regrettable, right? You're going to hang around until that.
I have no doubt about that. Equinox is just fine. Equinox is fine. It is safe, solid, and strong, and it'll do well.
Ross, on that note, we'll let you go there. Thank you so much for being so generous with your time and your insights.
My pleasure. Thank you for the opportunity.
It's Ross Beaty joining us. We'll see you on the next episode.